Europe and Asia have been outperforming the U.S. since President Trump took office again. European banks are doing better than U.S. banks, and China tech outperforming the Qs. For more on this global rally with Bob Pisani in today's ETF Edge, we bring him in. Bob, we've been talking a lot about this week, that the bullish calls for investing outside the U.S. have really picked up.
Yeah, it's very interesting to watch. And one of the issues here is, how do you invest overseas in the midst of potential trade wars? So I want to talk here with Perth Toll. She's the founder and CEO of Life and Liberty Indexes. She runs the Freedom 100 Emerging Market ETF. They use personal economic freedom metrics to invest in countries like Taiwan and Chile, South Korea, Mexico, Poland, Brazil, and others. Perth, you heard Scott there. There is a sudden spate of interest in investing overseas. Europe and China have outperformed the U.S. in the last few months. Your Freedom ETF is up 10% this year. It's outperforming the U.S. And emerging markets, look here, like Poland, South Africa, Mexico, they're all acting better. Why is this happening? Just give us an overview of why global is suddenly in.
Yeah, thanks, Bob. Yeah, this is cyclical, you know. Sometimes U.S. performs better, sometimes international performs better. Emerging markets coming back this year after not having a great year last year. And the U.S. had a fantastic year last year. So this is why we diversify. And emerging markets can be scary, but we try to make it less scary by being in the places that are more free, that have better rule of law, and have better protections for freedom.
I want to get into that, because there's a theory behind what you're having. It's just not buy overseas. Your ETF invests in emerging market countries with high freedom indices. Here's Taiwan, Chile, South Korea, Poland, Brazil. What are these freedom metrics that you're using, and how do they help countries get ahead? You say they make a difference, these metrics.
Yeah, absolutely. Emerging markets are full of autocracies, countries just coming out of autocracies. Sometimes, you know, investors want that growth from the emerging market space, but don't want to be funding the things that go on in some of these countries. So we try to make it easier for investors, a safer way to invest in emerging markets by freedom weighting instead of market capitalization weighting. So instead of having a large weight to countries like China, you know, before the war, Russia, Saudi Arabia, these types of countries, we have higher weightings to the freer countries like Taiwan, South Korea, Chile, and Poland. And that has given us a lot of exposure to the freer countries, which have better growth going forward and have more sustainable returns, more better recoveries from drawdowns, more resiliency, more efficiency in their use of capital. So, you know, we use both personal and economic freedom metrics from the Cato Institute and the Fraser Institute that have things like terrorism, trafficking, torture, and you know, as well as things like business regulations, rule of law, and so forth.
Now, I want to hit the issue of tariffs here, because that's coming up in a lot of this. On the tariffs, there are some countries like Chile and Poland, they have very low tariffs. And some countries like India do not. They have very high tariffs. Where do you stand on this? Do tariffs help or hurt a country's economy and stock market? What's the right way to look at that?
Yeah, so free trade is such a huge, important piece of economic freedom, which is a huge, important piece of our strategy. So we're absolutely pro-free trade, and you know, tariffs are a constraint on that. So we do not think that tariffs are helpful to the economy that's imposing them. You know, India has a low allocation in our fund. It's still it's included, but it has a low allocation largely because of their protectionist policies. I mean, they have the highest tariffs out of all of these countries. So yeah, absolutely. The tariffs are, our view is that it would hurt the countries that are imposing them.
All right, we're going to have a lot more coming up on international investing on ETF Edge. It's 1:10 p.m. Eastern Time. We're going to discuss all of this, the impact of tariffs on overseas investing, which countries have tariffs and non-tariff trade barriers, and which have pro-fair trade practices here. Pert's going to be joined by ETF industry investor Tom Lydon, former head of VettaFi. That's etfedge.cnbc.com.